CPA Dave Young is back with us. Dave, always good to see you.
It's great to be here.
Hey, this coming Saturday, Small Business Saturday. Of course, we want to encourage folks to shop local always,
Absolutely,
right?
great.
But we're thinking about small businesses this time of year and tax tips. And you got a number of tips. Let's start with the first one. You say consider restructuring. This is a new one, isn't it?
This is a new under the new tax code. So now it's, people who are in a small business, a pass-through entity, potentially could get a 20% deduction. So you really need to look at what type of entity you are, whether LLC, a sole proprietorship, S Corp, C Corp, LLP, all of those things make a difference how this 20% deduction comes into play. So look now so you can project even this year, maybe make a change for this year or certainly going forward into 2020.
Well, you want to take advantage of that deduction.
Correct.
All right, and now some of the things that we've talked about in the past. Max out that auto gas deduction.
That's right. So make sure you're keeping track of all your mileage. You know, a lot of people forget the little trips to the bank, that counts, or post office, or visiting your CPA, or wherever you're doing. A lot of people are not really good at recording it, so go back to your calendar, make sure everything's recorded, make sure you're not forgetting anything, and get it all recorded. If you get audited, the IRS expects to have notes, making sure you have a good record.
Okay, and max out that home office deduction if that's your line of work.
That's right. So if you do have an office in your home, it has to be exclusive use. So it can't be a spare bedroom that the kids are also using. It has to be exclusive use, but oftentimes people forget, hey, I'm a small business, I'm operating out of my house, I have an area that's exclusive. Well, then you have a deduction, so don't forget about that.
All right, take advantage there. Speaking of kids, hire your kids, you say.
That's right. That's actually become more valuable as the standard deduction has increased to $12,200. You could actually pay your children. Now, they have to be legitimately working in your business, and they have to be actually doing something, but if you have work to be done, you can hire your children. They may not have to pay income tax on it at the federal level, up to $12,200. They could actually fund a Roth IRA as well, and you get a deduction, and they don't pick it up as income. It's easy, easy deduction.
You just got to find work that they can do.
You have to find work they can do.
All right. Section 179. Remind our viewers what this is about.
So this is a big deduction where you can write off all the equipment at one time. So you go out and buy $100,000 worth of equipment. You must make sure it's in place by the end of the year. You can't, buy it now and it comes in January. It has to be in place now. You get a deduction for the full thing. And this year it's $1 million. So it's quite a bit of Section 179 deduction.
All right. Really take advantage of that. A couple other things as we finish up here. Keeping good records as well, and making sure that you are tax planning and taxes paid in as well, right? That's
right. So tax planning is a big deal. You have a window of time between now and the end of the year. So you got to make sure this year, for your safe harbor, you paid in 110% of last year's tax in most cases. So you still have time to make estimated tax payments or have it come out of your withholding through your W-2. But do not forget the tax plan. You don't want to be caught short. If you owe the IRS or New York State too much money, on top of that tax, they're going to lay on a penalty for you. So let's avoid the penalties by at least get you into a safe harbor position.
This is all about planning ahead.
Plan ahead.
Dave,
correct.
Thank you. If you missed any of our conversation, any of these tips, we'll share them online as well at rochesterfirst.com.